Good morning, students. Today we are back with our chapter on corporate and economic laws. The chapter that we would be dealing with today deals with Securities Contract Regulation Act and the Lloyd rules, that is, the Securities Contract Regulation Rules 1957. Now, when we're talking about this particular type of regulation, we need to understand that this regulation, this particular act, this rule, this set of rules have been specifically made to regulate the business of dealing in securities and any other matters which are connected in this particular process. Say, for example, what are the meaning of the terms like contract? What is a forward contract? What is a future contract? What are the records to be maintained by the persons connected in this particular entire transaction of dealing in securities? What are the different kinds of offenses that can be conducted in this particular type of process. So that is the basic aim behind this particular set of rules and this particular type of regulation, which is, I state again, the Securities Contract Regulation Act 1956 and Securities Contract Regulation Rules 1957. Now, without wasting much time, let's come to our presentation and take this up topic by topic, which is important for your examination and which is important in the real life perspective as well. When I state important for the real life perspective, see, every listed company today has to follow these particular set of regulations. So if you are listed, you have your shares which are on the stock exchange, or you have your debentures which are listed on the stock exchange, because even debentures can be listed. So at that point of time, by virtue of having your securities, and there's a particular definition for the term securities as well. If your securities are listed on the stock exchange, then you will have to follow and comply with this particular regulation. So first of all, the first thing that you need to get out of your mind is that it is applicable only for companies which have their shares listed. No, it is applicable for those companies in India who have their securities listed. We'll come to the definition of securities in a while. And subsequently, what you also need to understand is the applicability is whole of India. There is nothing in this law which has been stated that is not applicable to the state of Jammu and Kashmir. It is applicable throughout India, point number one. And it has a certain non-applicability as well, which we would now see as we start the content of this particular chapter. Students, whatever questions you have, please share your questions at the same time in the chat box that has been provided for your classes. Now, since I was saying that there is certain non-applicability also which is attached to this particular set of rules and regulations. Now, where I say that this law is applicable to the whole of India, there is a certain non-applicability which is stated in section 28 of the Securities Contract Regulation Act 1956. The non-applicability states that the provisions of this applicable shall not be of this act shall not be applicable to a certain set of companies or a certain set of authorities. First, it shall not be applicable on the government. So the rule maker is barred from the applicability, or is this particular law is not applicable on the rule maker, that is the government. Second, the Reserve Bank of India. Third, any local authority in respect of the Indian system. Fourth, any corporation set up under a special law. So if you have a special act, say you have a company like LIC of India. So LIC is formed under a special act. Electricity companies, they are formed under special acts. So those companies, they do not have SCRA and SCRR, that is the Security Contract Regulation Act, and Securities Contract Regulation rules applicable in them. Then any convertible bond or share warrant or any option or right in relation thereto, if it somehow gives you any kind of an option to obtain from the company or through the appointed agents of the company. When I talk about appointed agents of the company, I mean the registrar and share transfer agent of the company, that they would get certain bonds, warrants, or shares on the basis of the price agreed upon when the same was issued. So you may have an option that at a particular point of time earlier, there was a requirement and you were issued certain bonds or warrants which are convertible in nature. Now, there was a certain time period that, okay, 3 years would pass or 4 years would pass after the grant of this particular option or grant of this particular share warrant or grant of this particular convertible bond. 3 years hence, you can convert it to shares. And how would you define the price? Uh, it has been decided at the earlier date when these were first granted to you. So, earlier granted shares or options or bonds, today they are convertible. And who can get this done for you? Either the company or any other duly appointed agent of the company, that is the registrar and share transfer agent. So, on those particular securities, this is not applicable. And any class of contracts, any class of companies for which the central government says that, okay, this is not applicable, then the Securities Contract Regulation Act and Securities Contract Regulation Rules shall not be applicable on such companies. Now, when I talk about the structure of this particular act, what are the major headings that you have or major segments how this particular law has been designed or placed? Now, how is this particular law placed? One, obviously, Section 2 in almost every law talks about the definitions. So, here also it is not spared. Section 2 would be the definitions. Section 3 to 5 talks about recognition of stock exchanges. If you remember, at a particular point of time, probably in the other chapters, even you would have heard in one of my lectures, I also dealt with it, recognition of stock exchanges. So earlier in India, we had certain stock exchanges, almost like, say, Calcutta, you had a stock exchange, Delhi, you had a stock exchange. Obviously, there was one in Bombay, and there was in Jaipur, Ahmedabad. So different cities, you had different stock exchanges. But slowly, the concept of demutualization and corporatization happened. Now, I'm using this term right now. We would understand the meaning of this term maybe in the next 5 minutes or 7 minutes from now. But there was an era when finally they came up with demutualization and corporatization. And when demutualization and corporatization came, they said that whichever stock exchange opts for this particular system, we would recognize the stock exchange, otherwise, we would de recognize. So, right now, India has only two recognized stock exchanges. And these two recognized stock exchanges, my friends, are only your NSE and your BSE. So subsequent to this corporatization and demutualization, you finally have only two types of companies, and these two, these only to recognize stock exchanges. Let me just correct myself that way. And these two are the NSE, National Stock Exchange, and the BSE, that is the Bombay Stock Exchange. Now, when you have only these two stock exchanges, what happens to the others? Are they not in? Are they still not there? Like, for example, if a company had shares in Delhi Stock Exchange, would those shares cease to have existence? No. But those stock exchanges are not recognized anymore. They are not functioning anymore. But your share capital remains as it is because you're listed on that particular stock exchange. In section 6 to 9, they would talk about the governance part. Now, when you talk about governance part, you will say, okay, what are the powers of the various authorities? Say, when a company is listed, you would have a stock exchange. Why? Because your shares would be listed with the particular stock exchange. Then, when you would have your shares listed with the stock exchange, obviously there would be certain, these stock exchanges are governed by SEBI. So, automatically there would be a role play of SEBI. Then, who makes the laws? Central government makes the laws. So, the powers of central government, SEBI, and the stock exchanges are listed in section 6, 7, 8, and 9. Then, if you have a dealing in securities, it would be affected by section 13, that is contract and securities. Then you have section 17 to section 20, which deals with how are these securities licensed. Section 21, which talks about the listing of these securities. And when I talk about listing of securities, somewhere or the other, this section, when we talk about in practical applicability, then it has to be in consonance and parallelly taken care of, not just as per SCRA, SCRR, but also in respect of the ICDR regulations, the LODR regulations, so that you understand that one, how are these share capitals issued, how are these listed, what is the process of undertaking the listing or the IPO of a particular company, and then how, if you have a company's securities listed, then what all compliances you need to undertake on a regular basis under the LODR so that your listing continues, which is also known as continuous listing concept. So SCRA, SCRR at this point of time has to be read in conjunction. So I say in practical applicability, together with ICDR and LODR. Then, in case if say you apply for listing, the listing has been rejected. Then, if you have to take a matter for proceedings further, if you have to appeal against the particular order that okay, your company's shares will not be listed, then which authority will you go? Which is the appellate authority? And in case if that particular appellate authority rejects the order, rejects your prayer, relief that you sought, then where do you appeal? What would be the proceedings? What would be the mannerism? And in case of obviously certain offences which are committed by these particular companies in the process, then what will be the allied penalties in that particular set of offences, along with certain miscellaneous sections. So that is how 31 sections in this particular regulation have been divided. Now, section 2, as I said, is definitions. And when we talk about definitions and when we talk about securities, the very first term that is important is the meaning of the term contract. Say, if I have to deal with, okay, what exactly is a contract? Under Contract Act, the definition is different. But if we come down to this particular set of regulations, the meaning here is also different. Say, when I say here it is, means a contract for or relating to the purchase or sale of securities. Extremely simple over here and extremely direct in relation to either purchase or sale of security. So any contract which deals with either of these shall form a contract, shall mean a contract, shall constitute a contract under the SCRA and SCRR in short. Now, while I say, then you must also understand that this particular contract, it is one which sets out the details of the proposed transaction. What is the proposed transaction? So you're purchasing a security. This is the transaction in question. So any document which lists down the specifics, which lists down the details of this particular contract of purchase of securities or of sale of securities shall mean the contract. Now this could be for investment in equity, this could be for investment in preference shares, this could be investment or subscription to the debentures of a company or sale of either of these, maybe equity, preference or debentures. So these particular contracts are important, and generally if we talk in practice, then what happens is first a term sheet is drawn when we talk about contracts. Term sheet specifies the basic details. Then we come down to stating down, writing, drafting a contract, or maybe if shares are being purchased from a particular person, then maybe a share purchase agreement in question. So probably for your understanding, what you will understand also go through is that you may also have a term sheet or a share purchase agreement, which thereby is leading to your contract. Now, so your term sheet would list down the bullet points of contract. in advance. Your share purchase agreement would be specific. And this together would pave way for drafting of the contract. Now, say for example, there is a company and it has two shareholders. And who are the shareholders? Say the shareholders are a few years down the line, how it was Mukesh Ambani and Anil Ambani. It's just an example. Do not correlate facts with any other, if there is anything actual. But it's just for the purpose of the question. There are two shareholders, Mr. Mukesh Ambani, Mr. Anil Ambani. Now, Mr. Mukesh Ambani decides to sell his part of shares to another company. So, earlier, the shareholders were two individuals. One of the individual decides to sell his shares from of ABC Private Limited to PQR Private Limited. And this is for a specified monetary consideration. So there has to be a consideration when we talk about contract. And this is what we infer from the definition of contract under the Contract Act. So Mr. Mr. Mukesh Ambani decides to sell his equity of ABC Limited to PQR Limited. Who's the other shareholder? Mr. Anil Ambani. Now, how should he proceed to document the transaction? Now, if he is selling his shares, he would have certain rights, duties, obligations. He would have a certain price pertaining to that particular share, which he will have to understand and put down. Then, before he sells this particular set of shares, he would want certain conditions to be fulfilled by, say, PQR Limited. Then, the date on which this particular sale be completed. Another thing that could be that in case if there's a subsequent liability created by any act of PQR Limited, or there is a subsisting liability in respect of Mukesh Ambani, which PQR Limited may have to fulfill later on. Then a certain indemnity clause pertaining to that particular set. Then the representation or warranty is made by either of these parties. Could be Mr. Mukesh Ambani, could be PQR Limited. And certain terms and conditions, since we have a contract, so could be a possibility of breach of contract. So what terms and conditions would lead to a termination of this particular contract? So all of this could form part of your shareholders agreement, which is a supplementary document if you talk about to your share purchase agreement. So that way, this particular two contracts or agreements which move hand in hand list down certain areas or certain aspect of this sort. Now let me quickly move before I take up the next definition of corporatization. Let me quickly move if there are any questions by any of you. No questions so far, students. Now, as we move to the next definition, this term I just used a few minutes back that earlier that we had a lot of stock exchanges in India. Then subsequently there was a wave of corporatization, demutualization, and subsequent to that corporatization, demutualization, only two registered stock exchanges are there in the Indian system. Now this definition is under section 2, subsection AA, or since I've just stated it like that, I made an error. Since you're students of CA final, I would expect you guys point out what is this particular error that I've just stated and let me know that what is wrong when I said corporatization is under section 2, subsection AA. Only after you identify, any of you may identify the error pertaining to this particular narrative which has been stated by me, section 2, subsection AA, that I will move forward. So let me quickly check upon that how many of you are aware of what exactly is this particular error. And I am on the chat portal, students, the questions portal that you have, and I want to see your replies on this right now. It's a very basic point, but it's important that you guys are clear with this particular aspect, because sometimes you have a habit of writing the complete thing of it. So I'm just writing it as this. For those who write it like this, okay. For those who do not write it like this, it's important you understand my error here today. Okay, Ambika has replied. Ambika, your answer is absolutely correct, but let me give an opportunity to the others also. Maybe two or three more to come and highlight this so that it becomes a certain activity on the part of all of you students rather than just one giving the answer and everybody knowing it. Let me check on a few more. Hilda from Tamil Nadu. Incorrect answer. It took me a minute to go through the answer here by Hilda, but unfortunately incorrect. Quickly, students, go on. Since I have somebody who's given a correct answer also, that instills the faith in me that I'm going to see some more correct answers from you students. So Hilda, had I only seen the first part of your answer, I would have said, okay, you're on the right track. But subsequent to the second comma that you have put, first comma that you've put, the first segment of the between first two set of commas, that itself renders the answer incorrect. So it's important, students, that how you interpret. And but before you learn how to interpret the law, please understand how do you read how law is written. And that does not mean what is exactly the content, but also that is how the section number has to be read, section number, how it has to be spoken, because everything else would come later. If you do not understand this, then this is a very basic point. I would be definitely taking up in the next like 30 seconds or so, but then I'm awaiting a few more answers from you students before I take this up. Okay, so let me, without wasting more time, state it here. How do you need to speed this up? Section, clause, double A. First of all, it is not subsection because it is section 2. So this is the beauty of section 2, that it does not have subsections. It only has clauses and subclauses. But here, in this particular event, it has only section 2, clause double A. Now, moving forward with clause double A, what exactly is the meaning of the term corporatization? When I talk about the term corporatization, first of all, these are two words which have to be read together: corporatization and demutualization. Now, what is it? Say, for example, the succession of a recognized stock exchange. When I talk about corporatization, being a body of individuals or a society which is registered under the Societies Registration Act. So, if it is a society, obviously there would be certain set of people who were trading on this particular stock exchanges. They were coming together, they were handling the business. So what happened was, at that point of time, these people, they came together. They got a society registered under the company, Societies Registration Act, and or they may have gone together. They would have registered a company which was incorporated for the purpose that one, register as a corporate. Second, assist, control, and regulate the business of buying, selling, or dealing in securities carried on by such individuals. Now, who are the individuals who came together, who registered the society, who came together, who registered the company for assisting, regulating, or controlling this particular business? So, when these people, they came together as a corporate, that was corporatization. Now, if I have to talk further on this particular topic of corporatization, what I would like to give you as an understanding is, now this comes from somewhere around the year 1950s in the Indian scenario. Now, what was it? These stock exchanges during the early 1950s, if I talk about, they were operating either as body individuals in the form of registered societies, just like the definition here as well talks about. So they were working primarily for the benefit of those members of the society instead of working for the investors. So the investors had not say, but only those people who were controlling this particular business, they had say in this. So subsequently, there was a committee by M.H. Kania. So this committee was formed and it was looking to expedite the reorganization of stock exchanges in a manner where changes were made to facilitate corporatization rights from the persons connected in the trade. Now, these could be the persons who are registered as DPs, the persons, depository participants, is what I mean by DPs, or the traders, that is the brokers, sub-brokers, and the investors. So everybody should have their own set of rights, and that is what M.H. Kania committee was looking after. So this was done to separate the ownership, the management, and the trading rights from each other. So one, your owners of the stock exchange are different. Your management of this particular stock exchange is different. So somebody could be an owner but not be a part of the management who is running that particular stock exchange. Then trading rights. So who all can go and trade on that particular mechanism, maybe or for their own on their own volition or on behalf of their clients. So segregation of ownership, management, and the trading rights. And finally, in the year 2003, leading to 2004, the stock exchanges led to corporatize and demutualize, and finally, two such stock exchanges came into picture. So, what was the aim here? Segregate what are we segregating here first? We segregated here the ownership. We segregated the membership. And we segregated the trading. So this happened, and your corporatization came into picture in respect of stock exchanges. Now coming to demutualization. Now when you had the segregation of ownership and management from the trading rights of the members. So somebody who had ownership and management may or may not have had the trading rights of the members in respect of the recognized stock exchange. So my corporatization said that okay, these three need to be segregated. My demutualization states that okay, ownership and management could be one aspect, trading rights could be separate in respect to the members of the recognized stock exchange. So here you say there was a transition from mutual association of the stock exchange members operating on a not-for-profit basis. So earlier it was a not-for-profit basis to a limited liability for profit company. So even the stock exchange would earn income and it would invest the income. So it was earlier a not-for-profit. Now it was being converted into a for-profit entity because you're having members now. And when you have members, you have shareholders. You are accountable to those members. You are on behalf of those particular members when you're acting, and you may either form part of ownership or management. You may either form part of the trading rights of, or you have trading rights that okay, I can go on the floor of this particular stock exchange and I can deal on behalf of my clients. So by virtue of being maybe a stock exchange member, by virtue of being a broker, a sub broker, so that is how things finally culminated from 2004 to somewhere around the year 2005, subsequently to the M.H. Kania Committee. Let me state down the name of this particular committee for your ease so that you guys know it when you're attempting examination. And in case if you have to write and read, then you can say it is a result of the image Anya committee. That was about the corporatization and demutualization. Now coming to the term derivative. Now this is one term that probably you all would have seen for your accounting chapters also, or maybe when you're dealing with the topic pertaining to financial management as well. So similarly, just like you would have seen in the, say, under the financial instruments concept or the India's pertaining to financial instruments, you have the term derivative defined. Similarly, you have a definition here under the Securities Contract Regulation Act as well. Now, what does this term mean? The basic concept would still remain the same, that it is deriving its value from any other instrument. Now, this could be a debt instrument, it could be a share, it could be a loan, it could be an asset. So, you are deriving, a security is deriving its value from another instrument, or it derives its value. It is a contract which derives its value, say, from the prices of underlying securities or index of prices of underlying securities. For example, if I say, then there is a certain set of prices which are fixed for agriculture products. In case of, say, agriculture products when they are being imported or exported. So when contracts happen, when they derive their value from certain other parameters, so that could also be a derivative. Then commodity derivatives or other instruments which may be declared by the central government to be derivatives. So any particular instrument, any security which derives its value from another would be a derivative. So in short, that is the meaning. But in case if I have to really talk about, then when we talk about this particular regulation, we talk about the definition if it comes in examination. So just simply writing that, okay, it derives its value from another commodity, from another debt instrument, from any other contract, that would not be sufficient. We have to state three aspects majorly. One in terms of security, other in terms of contract, and third will be commodity derivatives. When you talk about security, now this security could be a debt instrument, derived from a debt instrument, share, loan, and risk instrument or contract. Second, a contract deriving its value from prices, index of prices of underlying securities. And third is commodity derivatives. Let me give you an example here. Now, what could be a possible example for derivative? Say, as much as the prices of either Nifty or Sensex may fluctuate, either it would increase or it would decrease. Basis that the market price of a share of a company will either increase or decrease. So, my share price is dependent on how the Sensex or how the Nifty behaves. So, if my Sensex moves up, my share prices may rise. Hardly there would be any option where you see that, okay, Sensex is positive, moving up and the share value is moving downwards. But because generally it is the similar kind of a trend. So that way it derives its value from Sensex. My share price of a company would therefore derive its fluctuation in value or the impact in value from the fluctuation in Sensex or fluctuation in Nifty, and therefore it is a example of derivatives. Let me, students in the interim, quickly go to my chat portal and see in case if you have any questions shared ahead. Okay, so far no questions. The next term that we're talking about is forward contract. And please remember, there's another term here which would definitely be sounding very similar, but it's different, and that is future contracts. That is also the next definition that we would talk about. So first, talking about the term forward contract. See, a forward contract is an agreement to sell. Now, since it's happening at a date which is forward, which is ahead, which is not today. So obviously, if you're discussing about selling something, then it is today would be sale. If I talk about Sale of Goods Act, today would be sale. But if it is at a forward time period, if it time period ahead in the time period ahead in time, so it would be an agreement to sell. So first is it is an agreement to sell a currency, commodity, or other asset. All right. So you're either selling a currency, you're either selling a commodity, you're selling an asset at a specified future date. So this is a forward contract. It is not in today's date. It is an agreement to sell. You go to a future date, which is specified. The price is also specified as on today. That okay, future date when I will either sell this, then this would be the particular price of my sale. Any type of contractual agreement that calls for the future purchase of a good or service. So there could be a contractual agreement that says that okay, this is the future purchase. The first segment was that I am talking about a sale. The second thing that you will talk about in case would be purchase. So forward contract could be for sale as well as purchase. Here also in case of purchase, my price would be agreed upon today. And if I'm purchasing, I will not have the right to cancel that particular contract. So this is either an agreement to sell or an agreement to purchase. The date is futuristic date, which has been decided and specified as of now. The price has been agreed upon today that either I will sell, if it's a case of sale, I will sell at this particular price, decided today for this particular date. Or if I purchase, I will purchase on this particular date, and the price would be as I have decided upon today. So maybe say there is a purchase or there's a contract of sale. Contract of sale could be for pulses or for rice. So what would happen is my farmer, he decides today that okay, I would sell this much kilos of pulses or this much kilos of rice next year. Now, when he harvests it, he would know that what is the tentative price of it. He might decide to lock the price today also. So he may say, okay, I know that this is the general price which prevails in this particular segment of pulses or this particular segment of rice, and I would lock in the price at which I would sell it at a future date, a specified future date. And so I'm deciding the price today itself and agreeing upon it today. By selling a forward contract, say today we have Reliance having JioMart. Reliance is also selling to the Kirana store system. If you would have seen the annual general meeting of the company back there in May or June. I think May it was. So they had announced that they would be dealing with the Kirana walas, they would get them a platform, they would be dealing with the farmers purchasing their products. So if my farmer decides the predetermined price to sell its produce of pulses, sell its produce of rice at a specified predetermined price, and the sale would happen, say, 1 year down the line, and that would be a forward contract in respect of the fixed price for the specified future date in respect of selling that commodity, that is the pulses of the rice, as by the respective farmer. Next term is futures contract. Now, what exactly is a future contract? Because we're already talking about a forward contract where we have a predetermined price, we have a specified future date where we are specifying that we are selling this particular currency, commodity, or product. Now, when we talk about a future contract, here again you have two parties because there's a contract and a contract is incomplete if you have only one party. It should have two parties, a buyer and a seller. One to buy, the other to sell. Now, what they say here is that one, this comes out of a forward contract. Why? Because it is done at a future date. Second, here they agree that okay, we will either buy or sell after a specified date. 3 months down the line, I'm here. Subsequent to that, I will either buy this or I will sell this particular security as per this particular contract. Now, here they have a regular daily settlement procedure. Say, forwards, what happens is the transaction happens after a year. So when the transaction happens after a year, so what will take place? Your payment would also get due after that particular time. So there is more risk involved in terms of payment receipt. There is more credit going out in the market. So when you have more credit going out to the market, there is no guarantee that the or subsequent to the performance of the payment, how quickly you would recover your payment, and your trading cycle also eventually becomes a longer one, and more credit risks comes to you as a party to that particular contract. So this contract, that is the future contract, in contrast to the forward contract, here in this future contract, you have a daily settlement. That is, okay, today I complete the transaction, I complete the payment also today. Maximum T plus 2. So I have to generally, what comes out as an outcome of future contract is that they settle every day and less of credit risk, less of quick payments. So you can enjoy quick working capital in terms of this particular system as well. Next is government security. So any security which has been issued by the government, which has been created by the government for raising a public loan, shall be defined as a government security. Say they come out with bonds, they come out with commercial papers, that would be a government security. They come out with saving bonds, they come out with national savings certificates, government security. Then, say the Food Corporation of India comes out with specific documents where you can invest, or the fertilizer bonds, power bonds, railway bonds, if they come out for purpose of raising a loan or raising a public loan more specifically, would be a government security. Next, defining the term goods. Very similar to what it has been in the Sale of Goods Act. That is, every kind of movable property other than actionable claims, money, and securities. So, all kinds of movable property is considered under the term goods, but it does not include one, money, because money is not a goods. It does not include securities. It does not include any kind of actionable claims which could convert into realization of which could be easily quickly converted to money, and it has the nature of money. So those kinds of like properties are not treated as goods. Next, term commodity derivative. Now, we saw what is the definition of the term derivatives. We saw what is the meaning of the terms future contract, forward contract. Now, similarly, derivatives in the definition of derivatives, we have the term commodity derivatives in the meaning of the term derivative, right? So subsequently, it is important that you also understand what exactly is a commodity derivative. Commodity derivative could be when your prices of certain commodities are the criteria for the price of your securities. Say how much the prices or the index of prices or the indices of prices of certain commodities would be. Your goods, your shares, your securities would derive their value as in respect of that particular set of goods, those set of prices. Say what could be a commodity? Commodity would be pulses, commodity could be uh, agro products, commodity could be your specific bonds, but no, not exactly bonds because that is in the first heading also under the term of definition of derivative. But could be like any of these agro products, could be cereals, pulses, rice, could be your wheat, whole wheat. Any of these could be a commodity derivative or any such underlying goods or activities basis which the prices can fluctuate or prices are affected in respect of contract. So commodity derivative is defined as such. Next, we come to the term non-transferable specific delivery contract. Now, what does this mean? One, it is non-transferable that you cannot transfer this. There is a specific delivery in respect of a contract. So, any specific delivery contract that okay, this delivery shall happen in this manner, or these many shares will be part of this particular delivery. There are certain rights or liabilities which could be attached to it. And this could be a delivery order, this could be a railway receipt, this could be a bill of lading, this could be a warehouse receipt. So goods are being transferred. Okay, so under any of these, if there are certain rights or liabilities attached, then these, in case of a specific delivery contract, these are not transferable, and that is how they have been defined under the Securities Contract Regulation Act and Regulation Rules alike. Next, option in securities. Now, what exactly is option in securities? Defined, of course, under Section 2, Clause D. Now, what is an option? I have been given an option whether or not I would like to get it converted. So, if at a future date, I'm standing today, I am getting an option, I'm being granted an option today that would at a future date, I would like to purchase or I would like to sell a security. So that particular right that I'm granted today is an option in securities. So whatever may be the price at a future date, if I would like to purchase or sell or have a right to buy or sell any securities in future, and if I'm specifying that in a contract today, that would be an option in securities. So I am through this particular contract giving the seller um, as in, if I'm the seller, I give the buyer an option, a right. So it's a right and not an obligation. So when I give this particular option, I am giving a right to my buyer, the buyer in the particular transaction, to buy or sell a specified number of shares at a particular date in future. So this is a predetermined price. There is a predetermined time period also. So I'm not specifying a date, but I'm specifying a time period, and this particular buyer will have the right to decide whether or not he would like to buy or whether or not he would like to sell. Buyer or seller would like to buy or sell in this particular transaction. Now here since I talk about option, I would like to talk about 2 or 3 more terms. Now what would that be? Here I talk about the term options. terms here, call and put. Now, what does call mean? Right to buy, right to sell. So you have a call option or a put option in respect to securities. The right to buy is known as call, and the right to sell is known as a put. Could come in your questions, could come as a possible, say, practical question, not just in another chapter, but in your chapter pertaining to strategic financial management as well. So it's important that you understand the difference between these two terms and how interchangeably people use it negligently, but they are to be used in the specific sense. Now, scheme. This particular word or term, scheme, has to be meant as if it is a scheme for corporatization and demutualization. So, trading rights were given when people came up as members of stock exchanges or recognized stock exchanges, and they had given certain consideration in that particular process of demutualization, corporatization. Then shares were given to them for a lawful consideration. And when they took shares, they obviously became members. They had membership cards of the recognized stock exchange, and they were given trading rights as well in respect of that, or in view of that membership cards of stock exchanges. They had a certain restrictions on the voting rights. Then, in respect of whatever the property recognized stock exchange had, now, this could be the business assets, it could be the rights, this could be the liabilities, recognitions, contracts, or any other kind of permission received. So, details pertaining to that are also could be stated in the scheme. So, this is scheme we should be talking about pertaining to corporatization, demutualization. Then, how the employees of recognized stock exchange would be transferred to another stock exchange, and any other purpose which could be talked about in this particular scheme of corporatization, demutualization could be forming part. So as in what is deemed fit would form part of this particular contract or scheme, if I say. So the contents of the scheme is under section 2, clause GA. Next, one highly awaited definition of securities. Since I said, okay, you cannot just be saying that, okay, since I'm dealing in securities, I'm dealing in shares. You could be dealing in shares, you could be dealing with bonds, you could be dealing with debentures, debenture stock, marketable securities. Now, are marketable securities which are tradable at the stock exchange mechanism, and they're easily tradable. Usually, when I say in today's time, they are dematted, so or dematerialized. So anything of a like nature in respect of an incorporated company or body corporate would fall within the definition of securities. Next, derivatives are also securities. Any other instruments issued by a collective investment scheme, the CIS scheme, to the investors would be securities. Then, as defined in SARFACI, there is a security receipt. So, if some asset has been placed as a security, if you've got a receipt for it, that would also constitute a security receipt. Then, if under mutual funds you've been issued in units, the units of mutual fund or any such similar instrument would also constitute a security. Then, if in case if there was a mortgage debt and a certain kind of debt is assigned to it, certain kind of receivable is attached to it, and certain beneficial interest is there, then any certificate or instrument which constitutes or which talks about this particular beneficial interest, which talks about this debt or receivable, would also fall within the purview of the definition of securities. And government securities would also form part, or any other instrument which shall be declared by the central government in respect of these securities, or the interest in these securities shall form part of the term securities under SCRA and SCRR. Now, very quickly, let me move to the chat portal and see in case if there's any question from you. Okay, there are a few. is core meaning of corporatization. Ambika, I would request you be slightly specific on your question. Ma'am, is core meaning of corporatization? Slightly difficult to make sense out of this particular question. In the interim, let me give you a minute to come back to your question so that we complete or we proceed ahead only after this. Quickly, students, avail of this particular facility which has been provided and share your questions right away. I'm awaiting your response, please. Is it similar with demutualization? No, they go hand in hand. Demutualization and corporatization go hand in hand when we talk about recognized stock exchanges and how they came into picture and what are the essentials of a recognized stock exchange, that it is demutualized and it is corporatized. Both. So one talks about that, okay, these three aspects are there pertaining to ownership, management, and segregation of trading rights. The other would be more specific and would talk about that how these were segregated and what are the rights and duties. Now I come to section 2 clause HA. 2 clause HA specifies about specific delivery contracts. Now what is a specific delivery contract? It will talk about the actual delivery, because till now we were talking about, okay, it's a future date. We are deciding the predetermined price today in respect of a future date, future contract which has to be taken place. So a commodity derivative would provide for the means specific delivery contract which talk about actual delivery, would talk about the actual delivery of specific qualities or types of goods. Now when it would talk about actual delivery, here it would also come to a future period. It would talk about how the price would be fixed and would talk about who are the buyer and seller. So here again, there's a specific delivery which has to happen. The actual delivery will be talked about. It is again at a future period. It will talk about a price which you're fixing or the manner of arriving at the price that you're fixing. And you will talk about who are the buyer and seller for the particular transaction. Next, spot delivery contract. Now, when I talk about a spot delivery contract, so there is again, spot delivery means this particular at that particular spot or whatever time in the particular contract is there, at that particular point of time, the delivery has to happen. So, actual delivery of securities, of course, because you're talking about a spot delivery, and the payment of price thereof. So, if you're giving a delivery, you would require consideration or the price to flow back on the same day as the date of the contract or the next day. So just like we were talking about, okay, settlement same day. So T or T plus 1, T plus 2. So today plus 1, today plus 2. So if the actual delivery is happening, within the next 2 days I should receive the payment. Or within the next 2 days if I've received the payment, the actual delivery should happen. Either ways. So the time period for dispatch of securities has to be excluded, but apart from that, the payment has to be at the time of the actual delivery. Settled quickly. So transfer and then in case if it's a case of transfer of securities in respect of or delivery in respect of securities which are in a dematerialized form, then if it has to flow from my account to my husband's account to transfer securities by the depository from the account of the beneficial owner to another beneficial owner, and they are being dealt with by a depository. And when are they dealt with the depository? If they are in the dematerialized format. I have a demat, my shares are not physical. I can easily sell the shares. I do not have to carry the physical share certificate. If it's reflecting in my online account on my demat account, it's sufficient that I have the ownership of those shares. So when they transferred from my account to that of my husband, my demat account, not my savings account, the specific demat account for that purpose, then also it's called a spot delivery contract. So as soon as I purchase, they get transferred. Or as soon as I sell, they get transferred. Now, subsequent to this, the next thing that we'll be talking about is the next topic that we'll be talking about is recognition of stock exchanges. Now, when I talk about recognition of stock exchanges, what is important for me to understand is it is divided into three segments. First segment, application for recognition of stock exchange. Second, grant of recognition of stock exchange. Third, in what cases there will be a withdrawal of the recognition that the stock exchanges have received. So, application for recognition, grant of recognition, and the withdrawal of recognition. Now, as I talk about the first segment, that is Rule 3, Section 3, read with Rule 3. So, this application has to be made to SEBI. So, if I am a stock exchanges, I have to get recognized as a stock exchange. I am talking about demutualization, corporatization for my stock exchange. I will have to make an application to the Securities and Exchange Board of India. Now, this would be as the format in Form A under the SCRA rules, and I will have to fill, I will have to submit, I will have to put the attachments as required, and I will have to file it with the SEBI. I will have to file with SEBI an application fees of rupees 500, which would be deposited to the treasury account of the government. Now, what do I state in this particular application? Okay, I have this application format in Form A. I file it with the SEBI. I pay the 500 rupees. But what will I put up in this application is a major question. See, since I talk about demutualization, I talk about corporatization, I talk about members, I talk about trading rights, I talk about ownership, I talk about management. So I will have to here list down in this application. I will have to state in the application one, what is the governing body of the stock exchange? What is the constitution of the stock exchange? What are the powers of the management? How will the business be transacted? What are the powers and duties of the office bearers of the stock exchange? Then, what is the various classes of members who can be admitted into the stock exchange as members who will have trading rights? Members shall have the trading rights. So, who are these categories of members or classes of members who can be given admission or made members? The criteria or the qualification of membership of the stock exchanges shall also have to be stated. Then, what will happen in case of suspension, say rejection of an application, expulsion of members, admission of members? So the criteria to be listed for that as well. Then, what is the procedure of registration of partnerships as members of the stock exchanges? So that would form part, in a way, it would be the bylaws of this particular stock exchange which you are filing with this Form A, which is the application of recognition of stock exchange. Next comes Section 4, which is the grant of recognition to the stock exchange. So once these documents have been filed by the stock exchange with SEBI, so grant of recognition has to happen. But before that, there is a power with SEBI that it can call for more information. It has the power to make inquiries, send questions, ask clarification, call for information from these particular stock exchanges, which is applying for recognition. And then it can also check whether it is complying with the regulations, whether it is satisfying the conditions which are mandatory for registration. Now, this recognition shall be given or granted in Form B. So, Form A, I am giving an application. Form B, I will receive the registration or the form of recognition. But what will be stated is that once it has been granted to me on a permanent basis, it shall be for a period not less than 1 year. So at least a time period of more than 1 year, I shall have this recognition as a recognized stock exchange. Second, the stock exchange shall have to comply with the conditions as stated in this particular law. That is pertaining to SCRA and SCRR, Securities Contract Regulation Act and Securities Contract Regulation Rules. So while I receive this Form B, there are certain conditions. It shall be for more than a period of year or not less than for a period of 1 year, and it shall comply, the stock exchange shall comply with the conditions as stated or prescribed in the provisions of the Act. Now this recognition has to be renewed. And when can it be renewed? So if my recognition is expiring on, say, 4th of January or 4th of February, so today is the last day that I should have applied for renewal. So at least 3 months prior to the date of expiry of the period of recognition, my stock exchange should apply for renewal. And renewal again, there will be a small fees which the stock exchange shall be paying to SEBI. Next, who here is eligible to be a member of the recognized stock exchange? Now, this was also a question which had come from one of the students. Now, this student is Ambika, who can be a member of the stock exchange. I did not take up your question purposely then because I knew it would be forming a part of my discussion subsequently. So I'm going to take up this right now. For that, let me see if there are more questions. Similar with demutualization, no, it goes hand in hand. SCRA is not applicable to government securities, but securities include government securities. No, it is not applicable to a government company. Ambika, it is not applicable to a government company, but it is applicable to government securities. So clarifying here, I reiterate that it is not applicable to a government company, but to any securities issued by the government, it is applicable. Say, savings bonds, national savings certificates, any bonds which has been issued by the government, this is applicable, but it is not applicable to a company which is a government. Ma'am, under commodity derivative, whether only government notified goods comes false here? Yes. Now, who is eligible to be a member of recognized stock exchange? The question's done. Let's come to this. Now, this is divided under 5 rules and another segment. First rule that we talk about is Rule 8, Sub-Rule 1. Now, what is my Rule 8, Sub-Rule 1? My Rule 8, Sub-Rule 1, my friends, talks about the fact that no person shall be eligible to be elected as a member. 1, if less than 21 years of age, so you need to be 21 or more. You need to be a citizen of India. You should not have been adjudged as a bankrupt. You should not have compounded with any creditors. So compounded would be like some kind of a compromise arrangement should not have happened with any of my creditors of my company unless I have paid 16 annas in a rupee. Then I should not have been a person convicted for a fraud or dishonesty. Then if I am engaged as a principal in a business other than that of securities or commodity derivatives, except as a broker or agent, then I cannot be elected as a member. Then I should not have been refused admission to membership of a stock exchange in a period of 1 year prior to date of rejection. So if my membership got rejected on say 10th of November last year, 1 year has not lapsed. Therefore, I cannot again apply to be a member of the stock exchange. But had it been like say on 1st of October last year, 2019, then a year has lapsed. Since a year has lapsed when I was last refused membership admission, therefore I can apply again to be elected as a member of the stock exchange. Now coming to Rule 8.2. So first one was general conditions or general aspects. Second is when you're connected to a member of a stock exchange. So one, I should have worked 2 years with a member as a partner or an authorized assistant, an authorized clerk, or as an apprentice. So I should have worked with a member for at least 2 years in either of these capacities. Second, I agreed to work with another member for a minimum period of 2 years. So if I have not worked for 2 years or more, then now I agreed to work for a minimum period of 2 years with another member, and I agreed to enter into bargains on the floor of the stock exchange, but in the name of such other member. Since I cannot be added as a member right now, I will engage into transactions in the name of such other member. Then I am the successor to any deceased member or retiring member. Then also I cannot be eligible to be added as a member of a recognized stock exchange. But in case if I have certain qualities or qualifications as stated by them, then I may be added as a member. Third, Rule 8.3. Now, in case if at the time of application for recognition or subsequent admission as a member, this shall continue if, say for example, today I'm an Indian citizen. I moved to the US subsequently and acquired citizenship. So when I cease to be a citizen of India, I shall not continue to be a member of a recognized org. Then if I'm adjudged as bankrupt, I shall cease to be a member. If I am proved to be insolvent, I shall not continue as a member. I shall not be allowed to be a member. Rule 8.1 is already talking about when you're talking about bankruptcy being filed. But here it says specifically if you're a member and recognition has to be considered, renewal has to be considered. If I am convicted already, then convicted of an offense involving fraud or dishonesty, then I engage myself as a principal or an employee in any business other than that of securities or derivatives, except as a broker or agent. Then I will not be entered as a member. And the governing body here may record certain reasons, seen certain qualifications or reasons from me in writing, and then they may allow me. Next, Rule 8.4. Any company shall be eligible to be elected as a member if it formed with the provisions of Section 322 being complied, majority of the directors are shareholders of such company and are members of the stock exchange. So if I have 3 members of stock exchange and they together make up this particular company, it can be eligible to be elected as a member of the stock exchange. Then the directors or members have ultimate liability in the company. So obviously the directors also have liability, but they have the ultimate liability, then this company can be elected as a member of the recognized stock exchange. Then, if such company is formed in compliance with Section 12 of the Act of the SCRA rules, let me be more specific here. It undertakes that it will comply with the financial requirements and norms as stated by SEBI. Directors are not disqualified. And then, minimum 2 years experience in respect of either dealing in securities or as portfolio managers or as investment consultants is vested in at least 2 directors of the company. And if they have that experience, they will be considered to be, this company will be considered to be elected as a member of the stock exchange. Now I come to the other section. The other section here talks about the member of the stock exchange being a firm, member of a stock exchange being the LLP. Now if you're talking about LLP, you have Partners or designated partners who similar to that of directors, so similar provisions are there for that. Next, withdrawal of the recognition. So once recognition has been granted to the stock exchange and it has been termed as a recognized stock exchange, this recognition can be withdrawn. Now, what is the criteria of withdrawing such recognition? One, in the interest of the trade, in public interest, or if you are of the view, or if you have knowledge that the stock exchange is not following the compliance, it is not following the rules and regulations which are applicable to it, then it may be given an opportunity of being heard. The governing body shall be called to question, and they will have to state as to why the recognition should not be withdrawn. And if withdrawal happens of recognition, then whatever contracts have been entered into before the date of the notification of withdrawal, central government will make such provisions that how the performance of those particular contracts which have happened shall be effectuated. Now, this withdrawal of recognition shall also be in written format. The next one I talk about is about administration of stock exchanges. Now, what exactly is administration of stock exchanges? See, when we talk about administration, you will have to talk about what are the powers of central government, what are the powers of SEBI, what are the returns that have to be filed with them, what are the inquiries that they can make, then what are the annual reports that the stock exchange shall have to furnish to the central government, how SEBI can alter the bylaws of the stock exchanges, then how the central government or SEBI can supersede the recognized stock exchange is governing body. So the governing body shall not have power subsequent to that. Then how the business of the stock exchange can be suspended after directions. So that is how we are talking about when we talk about administration of stock exchanges. So, very quickly, some specific areas which you need to definitely know is one, Rule 12, audit of accounts of members of stock exchange. So, any member of stock exchange has to get, every member of stock exchange, in fact, has to get his accounts audited by a chartered accountant, as and when such audit is required by SEBI. So, if you're a company, it is mandatory. If you're crossing certain threshold limits, it's mandatory. Or else, if SEBI has specifically directed that your accounts of your particular you as a member should be audited, then they will have to be audited. Next, Rule 14, certain books of accounts are mandatory to be maintained by the member, and they have to be preserved as well for a period of 5 years. Now, what are these books of accounts? What are these records that have to be maintained and preserved? One, if there are any meetings of the governing body, meetings of the members, meetings of any committees of the governing body, then minutes of those have to be preserved for a period of 5 years. Then register of members with complete details, just like you have in a company. The register of authorized clerks, the margin deposit book, the cash book, the bank passbook, the ledgers. Then in case you have security deposits, register of security deposits, journals, then authorized assistance record. So that has to be specifically maintained and preserved for a period of 5 years by the members of the recognized stock exchange. Then, what are the books of accounts which have to be maintained by every member under Rule 15? Now, register of transactions उसको आप सौदा book कहते हो कि भाई what was purchased, what was sold, the details of those contracts. Client ledger, day book, cash book, journal, bank passbook, then any book or format where you have stated, or a register where the complete details of shares and securities received or sold is received and delivered, in fact, is stated. That register also has to be maintained and preserved for 5 years time period. And there are certain books of accounts which are to be maintained for a time period of 2 years. Say, if there is a contract copy that I have or a contract note that I have issued to my client, so I have to maintain for a period of 2 years duplicate copies or counterfoils of those. Then written consent of my clients when I have to deal on their behalf. Then members' contract books showing the details of contracts which I have entered into on my own or on behalf of my client. That has to be maintained, but these three documents are to be maintained for a period and preserved for a period of 2 years subsequent to the date of transaction. Next, what are the returns to be filed? Now, the returns are one, relating to affairs of the recognized stock exchange, I will have to file with the SEBI and the central government. And this shall be about the official rates of the transactions enlisted, number of shares delivered through the clearing house, the markup of the prices in respect of the sale or purchase, the clearing house programs associated, the number of securities either bought on or removed from the forward list that shall form part. The inspection of books of accounts should be made available or allowed to the members of the stock exchange. Now, here my central government, through SEBI, has certain powers of passing orders. Now, in case if either of these documents is not maintained, these returns are not filed, then SEBI, in the interest of trade of stock at stock exchanges or in public interest, it has the power to pass certain orders. Now, these orders could be of a few types. One, I could ask, as in if I'm SEBI, I have the power to ask them in writing, the stock exchange in writing, as to any queries pertaining to the affairs of the recognized stock exchange, or in relation to the members of that particular stock exchange, or I may appoint any person to go and conduct an inquiry in respect of the stock exchange or its affairs, or its governing body, or its members, and a report being then submitted to SEBI for further action. Then, since I have power for inquiry, since I have power to send somebody, appoint somebody to conduct that inquiry, I have power to call for information. At the same time, I can also ask the director, manager, secretary of the stock exchange to produce books of accounts. I can ask a member of the stock exchange to produce his books of accounts. I can ask them to state about the dealings that have been entered into by them. Those are certain specific areas in respect of administration of stock exchanges. Now I come to section 7. Now section 7, my friends, deals here with the annual reports to be furnished. Let me quickly go through before that on my question portal. No questions so far, so we can definitely move ahead. I hope so, no more. Yes. Now, my stock exchange has to furnish to the central government certain annual reports. Now, what are these annual reports? These annual reports talk about the if there's been any change in the bylaws of the stock exchange. I will have to talk about that. In case if there's an emergency in trade, what is the action taken up by me? I will talk about that. If there are any defaults, securities which are listed or delisted, any admission, readmission, death, resignation of any member. So obviously we would have some legal hire coming into place. Talk about that. Any new subcommittees or changes in the committee structure composition. change in the composition of the governing body, then securities which are bought or removed from the forward list. This is something that we would have to specifically talk about in the annual report, which has to be furnished to the central government by the stock exchange. Then there would be certain restriction on the voting rights also. Now, what are these restrictions here? These restrictions here would be in respect of voting at a meeting by the members of that particular stock exchange, a regulation of voting rights of the members of the stock exchange, restriction of a member to appoint a proxy, because if it's a general meeting, and of course in general meeting you have the members of the company coming and putting their vote pertaining to matters and transactions put up. So they, whether or not they can appoint proxy, restriction on that. Then any other consequential or incidental action which is required in respect of those particular meetings of members, they can be put up, the restrictions can be put up by the SEBI on the stock exchange. Next, what we will be talking about is power of central government or SEBI. They can have a lot of powers. One, they can make rules, they can amend the bylaws, they can change the governing body, they can supersede the governing body, they can issue directions. So, the central government here, then how would they do it? They would do it by virtue of calling for a notification in that particular regard. That is about section 8, that they can do that via issuing notification. And how will they do that? They will first discuss it with the governing body and then accordingly they will pass such notification or amendment. Now, before we move to the next topic, it's 8:29 on my clock, and we would shortly commence at 8:34 with our next topic. So, before we quickly wrap up, I would also state that in case if you have any queries, put it down in the chat portal so that as soon as we commence back on 8:34, we first go through the doubts which are there by all of you, and only subsequent we move forward with the further ahead lecture. Thank you. See you in 5. Now, when I talk about contracts and options and securities, section 13 is the first section that we talk about, and it is about notified areas illegal in certain circumstances. That is where in various contracts that are being entered into by members of two or more recognized stock exchanges in maybe specific areas, states, how those particular contracts would require prior permission from the respective stock exchanges where these members are there as members, where these two persons are there as members, or where these two companies are there as members. So these would apply to specific states, areas, or certain aspects. One could be location based, the certain could be second could be transaction based. So what are these areas that would be specified in your section 13, the notified areas? Next, additional trading floor under section 13A. Now, what is additional trading floor? See, a trading floor is basically the area on exchange where your trading happens. Say, if I give you a recap of the pre-dematerialization era. Now, these members, stock exchange, they used to go to the stock exchange. They would have the share certificates or transfer forms in their hand. They would put it like this and they would say, okay, I have these particular shares and I need to sell off these shares on behalf of my client. Now, on that particular trading floor, if anybody would hear, okay, this is a share of Reliance Industries Limited being sold at this particular price, this person is willing to sell. Someone who's willing to buy would connect on that particular floor. That particular transaction would take place, and subsequently, on that trading floor, the transaction would get completed by exchanging documents, signed documents. Now, virtually now, since shares are more dematerialized than the physical format, so the exchange platform where online the shares are sold or purchased, that is known as a trading floor. So area where the trading occurs in the exchange is known as the trading floor. Now these trading floors are where they're in the various buildings of Bombay Stock Exchange and National Stock Exchange. So they're where they have those specific screens put up and you can view the prices and we can view how fluctuations are taking place on the prices. So that trading floor is there on the BSE and NSE recognized stock exchanges. And today's date, since it is now limited to dematerialized shares, so I will not state that it is exact trading platform, but they have now been dominated. They've not been changed. They've started disappearing. Why? Because this is more electronic. So you can only see the electronic systems put up around that particular place now to see what is the fluctuations in the prices of this respective shares which are under buying or selling mechanism. Now, what is an additional trading floor? It's a trading ring or a trading facility which is offered outside its area for the investors to buy and sell securities. Now, since the trading floor concept is gone, therefore this additional trading floor concept is also slightly redundant because everything is now electronic or more virtual than physical. And this additional trading floor, earlier the trading floors were primarily at your stock exchanges. These trading floors can be with your investment consultants, these could be with your brokers, these could be with your managers, and you can accordingly undertake those transactions sitting with them. Now, contracts in notified areas to be void in certain circumstances. So, if my bylaws talk about certain transactions, but my members have certain rights and they have entered into any such contract in contravention of such bylaw, then it is this transaction shall be void. Second, the transaction has been committed with any other person who has knowingly participated in such transaction which has led to a contravention of law, that is a non-compliance of law or non-abidance of such law. Then in that case, the rights of the person in respect of such contract which is entailed out of contravention shall be considered as void. Then members may not act as principals in certain circumstances. Now, generally, what happens is my member is generally an agent. He may sometimes be a principal also when he's trading on the trading floor. Maybe the virtual trading floor, additional trading floor, maybe online when he's conducting a transaction for his clients as a broker. So this could be he's acting as a principal, he may be acting as an agent. But under section 15, there are certain restrictions which are put up as per which the member cannot act as a principal with any other person other than a member of the stock exchange. So NSE BSC, if I am a member, I can act as a principal only for another member of the stock exchange. Otherwise, for my clients, I will have to deal with as an agent only. And I will have to secure the say if I'm dealing with as an agent, my client would have given me authority. If I'm dealing on the behalf of another member who's a principal, another member of the recognized stock exchange, I shall have to secure in writing consent and authority of that particular member that I will deal or I will act as a principal in his matter, in his contract. And in the same note, I will have to disclose that what is the agreement of sale, what is the agreement of purchase for which I am acting as principal. In case I am acting as principal in certain transactions, and within 3 days of such transaction, within 3 days of the contract, I will have to secure that written consent of that particular member of the recognized stock exchange. Now, in case of no written consent is there, or when such written consent is not required, if the member discloses in the note of that particular transaction that he is acting as principal and the other one confirms, then no subsequent written consent or authority specifically otherwise is required by me if I am acting as a principal. Next, contracts in derivatives. Now, what does this mean? See, when we deal with derivatives, these are also transacted on the stock exchange. They are traded on the stock exchange. Second, you need a clearing house to settle that particular transaction so the payments are cleared. Then, this contract in derivatives shall happen between such parties as the central government may specify in its official gazette. 3 aspects when we talk about contract with derivatives. 1. Traded on recognized stock exchange. 2. Settled on the clearing house. 3rd, between such parties and such terms as stated by the central government in official gazette. Power to prohibit contracts in certain cases. Now, who has the power? The power vests in central government, the power vests in SEBI. If they feel there is an undesirable speculation, then in that case, they may say that this particular person will not enter into a contract. They may state that some people in this particular state, this particular area, this particular geographical location shall not enter into such a contract. So the central government or the SEBI, it has the power to opine and accordingly prevent undesirable speculation by publishing a notification in the official gazette about restriction on or prohibition of certain contracts. Licensing of dealers and securities. So, unless and until there is a license granted by SEBI, no person shall carry on either for itself or on behalf of any other person the business of dealing in securities. So if I need to deal in securities, I will have to first apply for a grant of license from SEBI in that regard. Only subsequent to that, I can carry on any such transaction. Then, public issue and listing of securities. Now, when I talk about listing of securities, I will have to take care of the fact that this listing is one, I will have to have my securities listed by ICDR mode. That is, I go for an IPO. And subsequently, my shares or my securities, or my debentures, my bonds, whichever is getting listed, I shall have to continue to comply with the other requirements as made by SEBI. So it is not just that at the time of first listing, I will have to be compliant of law, but at any stage further also, I will have to comply with the other requirements. So every issuer will also have to say if I'm what is one specific requirement in this. So in case if I want to get my shares listed or say Bombay Stock Exchange, I will first have to seek an approval from Bombay Stock Exchange that they give their consent to having my shares listed on their platform. If they do not give me that platform, if they do not accept my application, if they reject it, I cannot go ahead with my further offer. I cannot go ahead with my IPO. So it is first that the recognized stock exchange should give me the required permission that my shares can be listed on its platform. Second, if the recognized stock exchange does not give me that permission, then I will have to repay all money which has been received from the applicant in respect of the offer document that was laid out. So I will have to then pay out that money in 8 days. If it is not repaid, then I'll have to pay it along with interest at 15% subsequently. So I'll have to seek the approval of the stock exchange, or else I'll have to refund back the amount is what this particular section talks about. The next segment that we would be dealing with right now is the investors' rights relating to dividend, income for collective investment scheme and mutual funds. Now, what is title to dividends? See, who is entitled to a dividend? Anybody whose names appears in the register of members of a company. He shall be liable to receive, or he shall have the right to receive dividend declared by the company in respect of that particular year, where he was the shareholder or security holder or member of that particular company, unless there is a transfer document which has been filed by that particular member for registering the name of for registering somebody else's name in respect of his shares, or for registering his name in respect of shares purchased by him. Now, this time period would get extended in case if there is a death of a transferee, that is the person who has purchased the shares. So, if he dies, then whatever time is taken by his legal representative, that is his legal hire, to establish his claim to dividend, that is first he either puts on record his death certificate, gets the shares transmitted, and subsequently claims his dividend. So that time period shall be extended accordingly. Second, in case of shares were transferred, transfer deed was executed, transfer deed was lost. How? My negligence, I left it somewhere. Second, theft took place. Somebody pickpocketed my bag, a copy of the transfer sheet, transfer document, that is the SH4, was also a copy of it. So, was also there in that particular bag. So, that's got lost. So, the time taken for the replacement of that particular transfer deed shall also get extended accordingly. Now, my transfer deed was to be lodged in a period of 15 days with the company. Due to post, say I sent the transfer deed through the Department of Posts in India. Usual time is around 4 to 5 days from my location to that particular company or its RTA. But it took my document around 15 plus days to reach. It was supposed to be reaching in 15 days, it took 16 days. Whatever delay is happening, due to causes connected with the post, that delay shall also be extended. Now, what will it not affect? It will not affect the rightful right of any person whose name is to be registered as a member or as a shareholder at that point of time. The right of transferee to enforce against the transferor if the company refuses to register. Say, if my name was to be registered in respect of shares earlier held by Mr. X, but transfer could not get completed. Or the company gave me reason that okay, the signature is mismatching on the transfer date. This is the signed and shares of physical and format. So at that point of time, I have the right against the transferor to go and claim the dividend which has been sent to the account of the transferor. That title to dividend still stays. Then, talking about right to receive income from collective investment scheme. So, what is collective investment scheme? Collective investment scheme would be that the holder of securities, the holder of instruments, the holder of units, if there is a collective investment scheme brought out and they subscribe to those securities in that scheme, they are issued to them, then any income which develops on that collective investment scheme in respect of that particular year shall be given to the member, or else the transferee who claims the income, in case if he has purchased those particular units, those particular instruments, those particular securities which are forming part of that collective investment scheme. Now, in case if someone's name was to be registered, 15 days have passed. Therefore, if it goes to the transferee, I will have rights against the transferee. If the holder expires, he dies, then whatever time is taken by the legal hire to get on record and establish his claim. If the transfer document is lost, then whatever document time is taken for replacement of that particular transfer document, the period shall get extended, but I will still have my right to receive income from this collective investment scheme of which I have purchased securities, units, or instruments. Right to receive income from mutual funds. So in case if I'm investing in a mutual fund, I want a specified rate of interest which makes my income stable and secure. So when I have my stable, secure income coming from that, obviously I am investing for that particular purpose and therefore I have the right to receive it. So if I am declaring, or if I am say participating in a mutual fund, then in that case, by virtue of the participation that I have in the mutual fund, I have the right to receive the income in respect of the units or the other instruments which have been issued by the mutual fund in which I have invested. Now again, 15 days time period to get myself on record in case if there has been transfer. Now before I move to listing of securities, let me give you a minute's time to one, go through your doubts pertaining to any of these questions, post it on the chat portal. And once we clarify the doubts, after a period of 1 minute from now, only then at 9:01 we would continue with listing of securities. That's the next topic. Let me quickly give you a minute's time for this. Quickly. Any doubts, students? Last segment where I received doubts was under commodity derivatives, government securities, demutualization, corporatization. So before we start with the listing of securities, let us quickly in the next 1 minute close down on sharing our doubts pertaining to the topics that we've just now covered. So it's 9, I'm waiting till 9:01. Come on, students. So far, no further questions on this. And since it's 9:02, I move to my next topic. And my next topic here is listing of securities. And since we talk about listing of securities, where are we getting the securities listed? What is the document that we file with them? What is the document we enter into with them? Quickly reply to these questions now. Since you did not have any questions, my questions come to you. So when we are listing securities, where are we getting them listed? What document do we enter into with the stock exchange? So it's not that my company is getting listed, so I go as it is. No, I sign a particular document which I agree that okay, these are the compliances that are to be undertaken by my company in case of my securities of my company get listed on the stock exchange. So what is that particular document called? Or what was it called under the earlier regime? Come on. Very quickly, be quick. What is the document that we sign with the stock exchange when we're getting shares or securities of our company, bonds of our company, debentures of our company listed on the platform of the stock exchange? All right, since answers will vary and it may take some time, so based the few that I have received, let me share. When I talk about the earlier time period, my pen isn't working, students. When I talk about the earlier time period, students, we used to, as a company, if my shares or securities are getting listed on a stock exchange, along with the company, I will enter into a listing agreement. Let me leave you a pointer with you. This listing agreement I would enter into as a company with the stock exchange. Now, this was prior to 1st of October 2017. Subsequent to 1st of October 2017 came the LODR. And when the LODR came, so you need to sign this LODR. You will take a printout in respect of equity shares, LODR in respect of equity shares, and you will sign it with the stock exchange. So that will also mean that you are undertaking that you will undertake all the compliance pertaining to listing of securities, so that continuous listing of your company securities takes place. Second, there are a few judgments which play an imperative role in this. Now, what are those judgments? The first is a Supreme Court judgment in the matter of Raymond Synthetic Limited versus Union of India. Now, what is this judgment talking about? This judgment states that the principal objective of the listing of a company's securities, the principal objective of the listing of securities of a company is to provide ready marketability. That is okay. You have a platform where you can sell your shares or purchase the shares instantly and impart liquidity. So when you have marketability, you will have liquidity because shares are there in the market, and free negotiability to stocks and shares. So obviously, when you have multiple buyers and multiple sellers, so whatever matches the buyer and the seller, they go ahead and undertake the transaction. So negotiation option between the purchaser and seller is also there. And protect the interest of shareholders and of the general public. So the interest of the shareholders is also protected, students, when we are talking about the shares being sold or purchased on the stock exchange mechanism. So this was established in this particular judgment by the Supreme Court in Raymond Synthetic Limited versus Union of India. Point number 1, principal objective of listing is to provide ready marketability, impart liquidity, and negotiability to stocks and shares in respect of purchase and sale. Second, to protect the interest of the shareholders and of the general investing public. Now, there was another judgment in Union of India versus Allied International Products Limited. Now, what does this judgment have to say? This judgment first states the same ratio that was laid down in Raymond Synthetics Limited. I come to it again. Principal objective about ready marketability, liquidity, free negotiations between the purchaser seller for stocks or shares, and second, protecting the interest of shareholders and general public. There was something more which came in this judgment. What was that? That before issuance of shares or issuance of prospectus, in fact, before issuance of prospectus to the prospective investor, you should have applied to one or more recognized stock exchanges seeking their permission that please list my securities. They will either accept, they will reject. So specific permission has to be sought from these stock exchanges in advance, recognized stock exchanges in advance, seeking permission from them that they will list my securities on their stock exchange. So these two was held in these 2 points, or in these two judgments, this rationale, this ratio was laid down. Then what are the conditions for listing? The conditions for listing is that you will have to comply with the conditions of listing agreement, now LODR. This is LODR since 2017, 1st of October 2017 onwards. Next, requirements regarding initial listing of public issue. So you will have to go ahead when you're entering into a contract with the stock exchange. When you're entering into an agreement with the stock exchange, you will have to have a non-judicial stamp paper of the requisite amount. Listing fees shall have to be paid, and any of the documents which are required as part of enclosures of the application shall have to be filed with the concerned recognized stock exchange. Next, delisting of securities. And what is delisting? My company's securities are listed on a stock exchange. Subsequently, there may be reasons, there may be grounds, there may be these grounds could be suo moto, these could be on behalf of the stock exchange, and which would require that the securities of the company may not continue to get listed or may not continue to remain listed on the platform of the stock exchange. So delisting would thereafter take place. Now, in case if one, there is an order that central government or SEBI says that okay, we will refuse to list the securities. So within 15 days, there is an option of appealing. Whom do you appeal to? Securities Appellate Tribunal. So once the stock exchange does not list you, you go to the central government or SEBI. Once central government or SEBI does not listen to you, you go to the Securities Appellate Tribunal or the SAT as you call it. Now, delisting of securities 21A. There are certain grounds. One, my company has incurred losses exceeding 3 consecutive years. Negative net worth or the net worth has eroded if we talk in short. So if my company's net worth has eroded, the company's shares shall not continue to get listed or stay listed. Trading in respect of this company has been suspended for a period of more than 6 months. So more than 6 months has lapsed and my company's shares have been suspended for trading. They are infrequently traded during the preceding 3 years. Then my company promoters, directors are convicted for failure to comply with regulations of this act, that is Securities Contract Regulation Act, SEBI Act or Depositories Act. Then in that case, delisting of securities may be contemplated. Now, in case of any of this non-compliance has happened, conviction has happened, and a penalty has happened of not less than 1 crore rupees or imprisonment of not less than 3 years, then in that case, there is a delisting happening. Addresses of the company, the registered office address, corporate office address, or that of its promoters or directors are not known or false addresses have been furnished by them, or the company has changed their registered office address under contravention of Companies Act and it is not informed the ROC. Then again, because you're not maintaining a registered office. Shareholding of the company. Shareholding of the company held by the public has now come below the minimum level applicable. Just like Section 3A of your Companies Act says that this is a minimum number of members. If you fall below the statutory minimum, the company cannot function. Similarly, if you're a listed entity, then there is a specific requirement under the laws here that what is the minimum public shareholding and minimum promoter shareholding. So in case if that particular criteria or threshold is also not fulfilled, then also your company shares can be or securities could be delisted. Now, in case if there is a refusal of stock exchange to list the securities of my public company, now in case if there is a refusal to list the stock shares, then this refusal has to be reasoned. That is, reasons have to be given in the order in writing as to why the securities cannot be listed. That's point one. Point number two, when the reasons are granted as to why the securities cannot be listed, then in that case, within 15 days, you can approach the central government, you can approach the SEBI. Once nothing comes from SEBI, you can go to the SAT, that is the Securities Appellate Tribunal, within the next 15 days of receipt of the order, so as to appeal against the order wherein refusal was there from the stock exchange to list the securities of that particular company. Just grant me a minute's time. My table is just dwindled away. Now, next section talks about rights of the Securities Appellate Tribunal against the order to list the securities of the public company. Now, when you talk about this, there are certain reasons, of course, which are to be, it has to be a reasoned order, that is, you have to write in reasons. The stock exchange has to give reasons as to why it has refused. So within 15 days, when after this order of the stock exchange, you're going to the Securities Appellate Tribunal, you're going to SEBI, or subsequently you go to SAT. So one, the application shall be then seen by the SEBI or by SAT subsequently. Then it can talk about whether there's an omission, whether there's a failure, whether there's a refusal in respect of the document submitted. Then they would grant the permission to revisit the application. And in case if the SAT subsequently, or Securities Appellate Tribunal subsequently states that, okay, you did not look into the application properly, the error pointed out by you is not required to be seen, or there's an unreasonable opportunity which was undertaken or exercised by the stock exchange by refusing to register or list the securities of that particular public company, it shall set aside that particular decision of the stock exchange and grant the permission to the stock exchange to list that particular company's securities. Now we come to procedures and powers of Securities Appellate Tribunal. Here on 22B, sections are till 31. In the last few hours of this particular chapter. Now, what are the procedures and powers of SAT? Well, very similar to what is laid down under the CPC, that is the Code of Civil Procedure. Now, what is this? One, it shall have to take the principles of natural justice. Is there too? That is, everybody is heard, opportunity of being heard is provided, no harm should be created, and no wrong should be created where it ought not to be otherwise have been in place. Secondly, what are the powers when I say that, okay, it will have the powers as vested in the civil code under the CPC, that is Code of Civil Procedure. So you can summon any person, you can enforce the attendance of any person, you can examine on an oath, you can ask him to submit an affidavit, you can go for examination and cross-examination, you can review the decisions, you can dismiss an application and decide ex parte. When I say decide ex parte, so I have an application. In that application, what happened was that the SAT issued notice to the other party. The other party did not appear. It did not appear first time, it did not appear second time, it did not appear third time. Then without, at the fourth time, waiting for the other party to appear and present its side, the SAT, having given them already multiple opportunities, can decide an application ex parte, that is without waiting for the other party to come, and use the opportunity, capitalize on the opportunity of given which has been granted to it to state its views, the opportunity of being heard. So those are the powers that the SAT has, just like a civil court. Now here, since SAT has similar powers, so obviously the civil court shall have no jurisdiction. The powers are already vested in the SAT, that is Securities Appellate Tribunal. And someone, just like you had a 15 days time gap for stock exchange to SEBI, SEBI to SAT, but in case if you are aggrieved by the order of the SAT, then you have 60 days time period to appeal to the Supreme Court. Now let me quickly give you a question on this. And before that, I would quickly go to the chat portal also to see in case if there are any queries. So far, no queries. My question is that SAT passed an order on June 5, 2020, and dismissed the application which was filed by ABC Limited in respect of the refusal of listing by the stock exchange. Now, by when can ABC Limited file an appeal before the Supreme Court? I state my question again that a company applied for listing. In short, I'm telling you again. A company applied for listing. The stock exchange refused listing. The company went to SEBI. It refused. The company went to SAT. Order by SAT was passed on June 5, 2020. Now the company wants to appeal to the Supreme Court. By when can the company file this application before the Supreme Court? Quickly, students. Very simple question. The law is right there on this particular page. You should just make an interpretation. Now, I want the date. Ambika, I want the date. I don't want what the law states. I want the date. If I'm giving you a specific date, I would expect a date in the answer. And this is important that you understand this from the examination perspective also. If you've been given, okay, by when can it file, and if you have a date in question, you'll have to compute the date in the examination and give the date. Stating law is important, but stating the final conclusion is equally important. See, the first thing that you would have to write in the answer, let me take this up now, would be that you would have to state what is the law. Next paragraph, facts in brief. Next, basis the law and the facts in brief, what is your final answer? Or as you say, conclusion. So first you will say that, okay, the company had an adverse order, or you would say this deals with section 22F or with appeal to Supreme Court in respect of an order dismissing the order of refusal of listing by a stock exchange, and where the aggrieved may file an appeal with the Supreme Court within 60 days of communication of decision. Further, there is an extended period of 60 days further allowed if the company has not been able to genuinely file the matter within a period of initial 60 days. Then your final conclusion, in light of the above facts, then you will talk about the facts, then you say, in light of the above facts, the company can file the application before the Supreme Court, or can file an appeal before the Supreme Court by, so within 60 days, June 5 will be counted, 26 days of June, 31 days of July, that makes it 57, by August 3rd. Correct answer by Ambika. So that is how by August 3rd, this particular company can file its appeal before the Supreme Court. Now I come to the last segment of this particular chapter, which deals with penalties and offences. Now, what are the grounds for penalties which can be there? Say, if a company or if a person fails to comply with any requisition, that is, in case if documents were sought and documents were not complied, enters into a contract which is in contravention of the law or which is prohibited, then enters into a derivative contract or maintains himself as a principal without being a principal, whether he keeps a place other than the recognized stock exchange for the purpose of entering into any contract in respect of purchase or sale of any securities. Then he enters into or keeps at any other place other than the recognized stock exchange contracts which are recorded or adjusted or enforced. So copies of that also can only be maintained at the recognized stock exchange or the And in case if not there, then of course there is non-compliance and therefore ground for imposing a penalty on that particular member. If he's not a member of the company and is purporting to, he's not a member of the particular stock exchange and he purports to be a principal or an agent under the law, then in that case penalty can be imposed. Then if he's not a member or he's not a dealer in the securities, he's not licensed to be a dealer in securities, but he canvasses, he somehow advertises or he speaks out or he touts that he can conduct this particular contract, conduct these types of contracts for himself or on behalf of any other person, then if he's doing such without any authority, then of course penalty can be imposed. Why he's doing without authority? He's not a member, he's not an agent, he's not a principal. Then if he gathers at any place other than the business place of the stock exchange to make bids or offers, then again penalties can be imposed on him. Then in that case, if any of these penalties are imposed, then along with the penalty, imprisonment can also be there up to 10 years, extendable to 10 years, or with fine of up to 25 crore rupees or both. So 10 years imprisonment or 25 crore rupees fine or both can be cast upon this particular member. Then there are certain specific grounds for imposing penalties, and along with those penalties, what are the so basically what is the section, what is the contravention, what is the penalty? One, if there's a failure to furnish any documents that have been asked, any reports that have been asked, any bylaws that have to be submitted, or if they are false, incorrect, or incomplete, then there's a fine up to 1 lakh per day during such failure, subject to a maximum of 1 crore, no imprisonment. If the records, the books of accounts which are to be maintained, they are not maintained, and something which is in non-compliance, so if there's some books of accounts which are stated in the listing agreement or the LOTR and they have to be maintained and they're not maintained, then at least 1 lakh as a fine, and this can be extendable to 1 lakh per day subsequently, subject to maximum of 1 crore rupees. So what we'll do is I'll probably share with you by over this class what are the types of contraventions. You can see the penalties at the side. Then when you're undertaking a contract for your client, you have to enter into with an agreement also. If you do not enter into in that agreement, then that is again an offense. Penalty can be imposed. Then say I am a listed entity. Then my shareholders, my members may have grievances. So those grievances generally right now for stock exchanges, you have a mechanism of scores portal, SCORES. So on scores portal, if there are grievances there, or physically if there were grievances which were sent by members to the company, and those grievances have not been redressed by the listed company, the proposed listed company, within the time period specified by SEBI. So if it's a scores portal, they will automatically say, we give you 15 days to take it up and put back what is the resolution of this issue. Then in that case, or this grievance, if that particular grievance is not sorted, if that grievance is not cleared, if that grievance is not redressed, then under 23C it's an offense. Then there may be, in case of brokers or in case of principals, in case of agents, in case of DPs, in the bank account of that particular person, in the bank of that particular member, he may have money which is there for self-use of client or for any other client. So he should be able to segregate those particular securities and that particular money in respect of money of client for self-use or for any other client. And if segregation is not done, again it's an offense. Next, if the listing agreement conditions, delisting conditions, any other breach that is connected in that regard, may it be in respect of collective investment scheme, real estate investment trust, that is REIT, infrastructure investment trust, AIF, that is alternative investment fund. So in case if any of these non-compliance is there, then under 23E, that's an offense. Under 23F, if there are unlisted securities, you have a dematerialization, you get excess shares dematerialized. You deliver excess shares in respect of that unlisted security. That's an offense. If now, since they were on members of stock exchange, now they're on a stock exchange also. If the stock exchanges fails to furnish its returns to SEBI, it furnishes false return, it furnishes incorrect particulars, incomplete periodical returns, amends the rules or bylaws, does not comply with the directions of SEBI, that is offense under 23G. Then, if there are transactions or a stock exchange or a clearing house corporation, it fails to conduct its business with its members and or conducts it in a manner which is not as per the rules and regulations which has been stated by SEBI, then in that case it is an offense under 23GA. And last is 23H. If the directions by SEBI is not followed, if the articles or bylaws of recognized stock exchange are not followed by the members, that is offense under 23H. Now, there's one more, 23K. 23K states that in case whatever penalty is realized out of these particular offences, this shall be transferred to the Consolidated Fund of India and they shall be used for the purpose of investors. The power to adjudicate. Now, in case if any of these orders are passed, the SEBI may appoint officers who may give the other person an opportunity of being heard before imposing a penalty. So it could not be that directly, okay, there's an offense, we'll impose penalty. They will give you an opportunity of being heard. There'll be a person who will be authorized to hear those kind of matters. He will listen to you. He will thereafter hold an inquiry if required and accordingly impose a penalty if required. Now, while this adjudicating officer is giving you an opportunity of being heard, he can hold an inquiry, he can enforce attendance, he can summon you, he can ask you for more facts, he can inquire for any fact, any document which is relevant to that particular inquiry and its subject matter, and accordingly he may impose penalty as he thinks fit. Then the board here, that is the Securities and Exchange Board of India, it has the powers to examine the records of any such proceedings. So it may go ahead, it may say, okay, I want see the records pertaining to the refusal of listing matter pertaining to XYZ Limited or non-compliance of listing agreement by XYZ Limited. Then it can cause that all documentation pertaining to that be furnished to SEBI, and SEBI will go ahead if there is any error to the extent it is not in the interest of securities market, and accordingly pass an order on enhancing the penalty, decreasing the penalty, or quashing the penalty altogether. Now, when you're talking about what is the penalty, you will have to consider a few factors. First, what is the gain, what is the unfair advantage which is made as a result of the default? Whether the nature of the default is repetitive in nature, whether there is an amount of loss which has already been caused to the investor or investors as a result of the default. So these factors would help SEBI take a call, or the adjudicating officer to take a call as to what should be the quantum of the penalty in that particular case. Now, settlement of administrative proceedings. Now, any person against whom proceedings have been initiated, then could write an application to SEBI saying that, okay, I do not want to move ahead with this particular application. You may settle my proceedings, and whatever amount you say, I will be filing, and you can, in a way, compound my application, compound my case. So here the word used is not compounding. The word used here is settlement of the proceedings already initiated for the alleged default. So procedure shall be as per SEBI Act. Then this shall not be against the order by the adjudicating officer, and whatever amount should come as a result of the settlement shall go to the consolidated fund of India. Now, how can this particular amount be recovered? So, a certain person is supposed to pay some amount and this amount is not yet paid. How can it be done? Attachment and sale of movable property of the company, the directors. Attachment of the bank accounts, company directors. Attachment of sale of immovable property, company directors. Directors or key persons can be arrested and detained in prison, and a receiver can be appointed for the management of the assets, that is the movable and immovable properties. Now, in case if somebody dies, his legal representative shall be liable to make the payment in respect of the liability or the penalty, but only in respect of the estate which he has received or inherited from that particular person who has died. Now, appeal to SAT. So, if you are aggrieved by an order of stock exchange or adjudicating officer of SEBI, within 45 days, you go to SAT. Further extension of 45 days is possible. This is not the 15 days concept of refusal of listing. This is for other matters. Then, an opportunity of being heard shall be provided. Either confirm, modify, or set aside the order. Then whatever is the final order shall be communicated to the parties and to the adjudicating officer who was put into picture. And whatever is filed before SAT shall be disposed of within 6 months. Now, special courts will also be established under this law, which can look after these offences for the speedy trial, so that it's not a case where multiple dates happen and a lot of time is wasted during the litigation process. So, CPC, when it is having you're having a special court, you're having speedy trial of offences, the Code of Criminal Procedure shall also be applicable on such special courts. Appeals and revisions are possible within the local jurisdiction. And then you have certain offences. Now, 23M talks about that in case if there is a contravention, there is an attempt to contravene, there is an abetment in respect of contravention, for which no punishment is elsewhere there in the Act, there could be an imprisonment. And, imprisonment or fine. Imprisonment up to 10 years, fine up to 25 crores or both. And if this person fails to pay this particular penalty of 25 crores, then further imprisonment of 1 month, which may be extended to further 10 years, a fine which may extend to 25 crores. So first is contravention, second is non-payment of the penalty laid as a result of the contravention. Then certain offences can be compounded. Those with imprisonment only, or with imprisonment and also fine, cannot be compounded, but those with imprisonment or fine or both can be compounded. With that, I close down on today's session in terms of the presentation. If there are any queries, students, I would first take those queries, or else we'll move forward, or else we'll wrap up for today. Since it's 9:45, let me give you a minute or two's time to post down your queries on the chat portal, and subsequently we can move ahead and close it. Okay. One question all of you are supposed to answer. One of the most recent provisions that we've just read through, and this provision was that which offense is compoundable. Which offense is compoundable under the SEBI Act? Or what offenses can be compounded? What offenses can be compounded? Come on, students, what offenses can be compounded? Then, another point, there is a recent amendment which is obviously immediately applicable on the November students and subsequently applicable for the May students as well. Wherever the word adjudicating officer is appearing in respect of offences, the word should be replaced by the word board. Wherever you have the word written as adjudicating officer, it should have been read now as board. And while we are waiting to see this particular response on this question from all of you on what offences can be compounded, there is one more amendment which you need to know, which has come up as an insertion, as a new insertion in the law. Now, this says that if there is any kind of knowing alteration, destruction, concealment in respect of records of the board, or without being trying to, without the authority to access the records of the board, someone tries to take an access. Then, without the access to download or extract copies or reproduce any regulatory data, you're doing that. Or you are introducing a computer virus in the system of the board. Then, in that case, you are liable for penalty, and this penalty could be anywhere from 1 lakh to 10 crores or 3 times the amount of profit made out of such act, whichever is higher. Ambika replies back, offences which do not involve imprisonment shall be compounded. No. Slightly revisit your answer, Ambika. Someone else willing to correspond on that particular answer? See, when I talk about offences which are compoundable and not compoundable, those offences which have imprisonment or fine or both, they can be compounded. That is, you can pay a fine and penalty and you can move ahead. But the fact is, you should not repeat the same offence. It should be only a single time offence, should not be repeated subsequently. Those which are with only imprisonment or with imprisonment and a fine, either imprisonment or imprisonment and fine, they cannot be compounded. That is the difference, and therefore this particular question was posed to you. Okay, since no more questions have come up as of now in respect to today's lecture, so I would like to close down this lecture on this particular time now. And if there are any queries, students, I'm coming back tomorrow in the evening again. So whatever queries are there in particular pertaining to this chapter also, you may come back with those questions tomorrow evening as well. Until then, do revise, do try and write answers, do try writing the case studies as we've discussed, of course, with law, facts and brief, and then the conclusion. That you develop that style and the pattern of writing an answer, including a normal answer and case study, before your examination, and you're acquainted and you're well versed with those kinds of mannerisms, and that would aid you during the time of your examination. So, with that, I sign off for today. Study well, prepare well, and do well. Thank you.